Welcome to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skabowski of Remax Lakes. Welcome to the show.
Here we are. Haven't seen you in a while. I'm Mark.
Nice to meet you. Hey, nice to meet you. I know it's been several weeks. Let's see. I guess my big question here this morning: are you buying a house in Fiji?
I am not buying a house in Fiji
Because that's where you just came from.
I just came back from Fiji on a scuba diving trip.
Yeah.
It was phenomenal.
Yeah, I bet.
Absolutely. Couple weeks. It flies by.
Yeah.
It starts out. It's like, oh man, because this is the busy time for real estate, right?
Oh yeah, for sure.
It is. I mean, and I do work when I'm on these trips. Fortunately, even though it's remote, they do have internet
Yeah.
in Fiji.
That's good.
And you can make phone calls.
Yep.
But the 16-hour time difference
Yeah.
is the big challenge.
Because you're back a day.
We're back a day.
We're back a day.
So I had an app on my phone
Yeah.
that basically it's just a clock on my iPhone. I click it and it would say New York Eastern Standard Time
Yeah.
is yesterday at whatever time.
Yeah.
So for me, 5 o'clock in the morning over there, because I get up at 5 or 6 in the morning.
Yeah.
It was middle of the afternoon here yesterday. So it was just trying to time that. And I did have a couple contracts. I mean, I actually got 2 offers accepted while I was gone.
Yeah. Wow. All right.
Yeah.
Wow.
So it was you can do. So I have to say the farthest away I've been when I did a transaction, that's the beauty of technology, was in Stockholm, Sweden. I did a deal in Stockholm, Sweden.
That's awesome.
One time. Well, this time I got 2 done. Accepted. They're not done.
Yeah, okay.
2 offers accepted while I was in Fiji.
That's awesome.
So, but trying to do the date stamps, for clients, I'm thinking about it because I use DocuSign for, electronic signing.
Oh, boy.
It's like, is it putting my time because I'm a day ahead and the offer's already expired?
Right.
Or is it there? Everything worked out.
That's
it was
good.
all cool.
I get confused with Central Time. I don't know how you do it.
I know. But, even while I'm gone, I'm working.
Yep.
And I'm thinking about stuff. So I want to talk a little bit today about, for potential buyers. Because there's still, you're hearing in the media, homes are sitting on the market longer. Prices are dropping. That kind of stuff, and again, I check the news every day, even while I'm gone. I'm looking at it, read my news, and try and stay up in the market. Bottom line, real estate is a long-term investment, right? We're not day trading when it comes to real estate.
Oh, no.
You're not buying and turning around in 30 days, I'm going to sell.
Yeah.
So if you look, and there's a thought process out there called the 5-year rule, and it's not a hard and fast rule, but in general, if you're going to buy real estate, you ought to think about holding it for 5 years. Because over the course of 5 years, it's going to appreciate. In our market, the average increase or price appreciation on real estate has been, again, this is pre-COVID, was anywhere from 3 to 6%. Lake properties maybe a little bit more. And this is all assuming you keep it in the same condition. You're not doing additions. You're not going in and making significant upgrades to put it at a different value, but just maintaining what you've got. You're going to get 3 to 6, 4 to 7, something percent price appreciation year over year.
Okay.
You're going to get that year over year. So if you're going to buy something and you turn around and sell it in a year, well, you might get 4% price appreciation, but it's going to cost you to sell. You got to prepay the tax, all of that stuff.
Correct.
Probably not a good short-term investment.
No.
It's just not. It's because, real estate's a fixed asset. It's not something that you can very easily sell in a very quick time frame unless you drop the price.
Yeah.
Every house is sellable depending on the price.
Right.
So that's from an investment standpoint, 5-year window. Now, obviously, you got to figure out for you, does it make sense for me to buy and or rent? We get that a lot. People are moving into town. You're looking, maybe you're like me, getting close to where, hey, I'm going to retire. Where would I like to be? Should probably check out the area where you're thinking about buying in. Maybe renting short term is the right move rather than buying something.
Right.
And, oh my gosh, I don't like this.
It goes back to your why.
It goes back to your why. So, but over 5 years, home values in Indiana went up about 57%.
Wow, that's more than what
Over 5 years. The
That's-
average for the country is 55%.
Okay.
So we exceeded the national average.
Yeah.
Interesting, I did look in D.C., Washington, D.C., because my daughter's there looking to potentially buy a home. Only went up 11%. But I think that's because their prices are so high to begin with.
Well, if we're like 4 to 6% in a regular year,
Right.
times 5 years, you're looking at 25 to 30%.
Right.
But we've had some extreme years.
We
where
had
they-
some extreme years
where they
during
went up
COVID
quite
over
a
the
bit.
last 5 years.
Yeah.
So I guess bottom line is, are prices beginning to pull back? Yes, they are. Prices have decreased about 3%.
But
year
it's
over year.
not. But there's no cliff. It's
There-
not like what everybody. Oh, I'm going to wait for the market to crash,
Right.
and then I'm going to buy a house.
Right.
No, it's
Right.
That's not happening.
That has not happened. There's no indication that it's going to happen there. And yes, days on market is beginning to, get a little bit longer than it was. We're not selling stuff in one day.
Mm-hmm.
It might take 15 days to get an accepted offer. It might take 30 days to get an accepted offer. But by no means are we back to a buyer's market. We're still making that shift to a more balanced market. But for buyers, waiting for prices to drop dramatically just
It's
doesn't
just-
make sense.
it's not gonna happen.
You need to evaluate your why and make a good decision for you. And after the break, we'll continue this and we'll talk a little bit about, for buyers, what's your why mean?
You're listening to Real Estate in Real Time. We'll be right back. Welcome back. You're listening to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skabowski of Remax Lakes, and we're talking about a home being a good investment.
Yeah, well, a good investment, financially.
Mm-hmm.
When you have rent, what do? It's just like
Out the
you
window.
get no return for
No,
it.
right.
Now, I'm not saying renting is a bad thing, because there probably will be. We've considered buying a second home somewhere, like we were talking about before the break. Don't know exactly where we want to be yet.
Yeah.
So maybe we buy something and, oh my gosh, and we're talking about this 5-year rule.
Yeah.
Do I want to have to hold it for 5 years, before I make a decision? Or am I going to buy something and then, oh man, I really don't like this. Now I got to turn around and sell it at a loss.
Yeah.
When I say a loss, it's still I could use it. I got some utilization out of it during that time period. But ultimately, if it's not where I want to be,
Yeah.
why own in that marketplace?
Mhm.
When, I worry about it, because that's what I think about, and I give people a lot of credit. There are folks, I grew up in Michigan and everybody had a house in northern Michigan, Traverse City,
Yeah.
they take off on Friday afternoon and head up north.
Sure.
Well, my dad is like, why do I want to have a place that, I got to get in the car, fight traffic, because at the time it was, a 5-hour drive up to northern Michigan,
Yeah.
and got to go open the cabin, close the cabin up, worry about, insurance, all those other costs that go to it, especially with the advent of Airbnb and VRBO and all of those things. You can do short-term rentals that are furnished.
Mhm.
Does it cost you more? Yes, it does. But if I'm only going to use it for a couple of months out of the year,
Right.
why not do that, rent versus own?
Yeah.
Now, is that an investment? No. But I also don't have the potential loss associated, the potential risk. You buy something in Florida, you got hurricanes, you've got home insurance rates have shot through the roof. There's a lot of factors that go into making that decision. Should I have a second home or not?
Yeah.
But for primary residents, you have to examine your why. What does that mean to you? Do you need more space? Do you need, if not more space, do you want a bigger yard? Is the location not great for you? A lot of times I get buyers that are very price sensitive, and especially in today's market, because prices have done nothing but go up. So they're trying to find more affordable places to live, and sometimes that comes with, you can buy in Wabash a lot cheaper than you can buy in Warsaw.
Yes.
You can get a lot more for your money in Claypool than you can in Warsaw.
Yeah.
However, do you want to drive that, especially Wabash? I did have a client not too long ago, worked up in trailer factories, up near Elkhart. And it was looking at Wabash. I'm like, do you really want to get in your car and drive an hour and 20 minutes every day, or an hour and 10 minutes every day?
Right.
Well, cost. I said, well, yeah, but what about the cost of wear and tear on your vehicle, the operational costs? It's the accountant in me coming out. The cost of fuel, every day. Back and forth, beyond the cost of your time. And if you want to make that decision, great. You know, when I moved here, I drove to Fort Wayne every day.
Yeah.
You know, as president of a company in Fort Wayne, I was driving every day, an hour each way. I was productive. I was on the phone, talking to people all the way, but it was an hour one way. You live it every day, right?
Oh, yeah.
You come from Fort Wayne here every day.
Right. Yeah.
So that hour drive is acceptable to you because of the lifestyle that you choose to live.
Correct.
That is your why. You would prefer to be there than here.
Well, just,
for your family.
Yeah,
I
right,
mean, that's
exactly.
where they grew up. That's where your kids
That
grew up.
born and raised. Yeah.
Right. So
Yeah.
your why will drive a lot of that stuff. It isn't always just about the price.
Right.
Bottom line, it is not always just about the price because there's always a trade-off.
Mm-hmm.
There's always a trade-off. Yes, houses in Wabash are cheaper.
Yeah.
They are less expensive. You can get more for your money in Wabash.
Mm-hmm.
Do you want to offset that with an hour drive every day?
Right.
That's something only you can decide.
Exactly.
Do you need 4 bedrooms, 3 bedrooms? Do you really need 4 bedrooms? Do you need 2 bedrooms? You know, I get young couples, well, we're going to make this our forever home. Our first house is going to be our forever home. You're probably not going to buy your forever home with your first house.
Correct.
Right? Now, I counsel that a lot. They still look, but especially with prices where they're at, maybe it makes more sense to buy something a little bit smaller that meets your needs today
Mm-hmm.
and, you know, will meet your needs for not only today, but for the next few years, to where you can turn around and sell it, take the equity from that
Right.
to buy your next house.
I always said I couldn't afford the big family home that I'm in
Right.
right now if it wasn't for me buying my first home.
Right.
Because I use the equity from that home to buy my family home.
Right. And the whole idea behind that is when you rent, you're getting no return on your money.
Right.
All you're getting is increases. Now you get, you know, you don't have any expenses related to other than paying your rent, your utilities,
Mm-hmm.
but you don't have the opportunity to gain some equity in that house. Whether it's just normal appreciation, and you know we're always talking about this 3 to 6% per year,
Mm-hmm.
but if you put some sweat equity into it,
Mm-hmm.
you might receive 10%.
Mm-hmm.
You know, price appreciation over that time.
Right.
So, you know, it really comes down to your why.
Mm-hmm.
Why am I purchasing a house?
Mm-hmm.
You know, if you prefer to stay a renter, then stay a renter.
Mm-hmm.
You know, I mean, because that lifestyle-wise, that's not a bad deal.
Yeah.
To
No
be able to walk,
maintenance.
no maintenance.
No
I don't have to mow
lawn.
the grass. I don't have to maintain any of that stuff.
Right.
But you're not going to get that equity gain that you could if you potentially owned. And realistically, want to just hit one more time, real estate's a long-term investment.
Yeah.
It's not a 1 year, 2 year generally. Now, obviously, a job change could impact that. But if you plan on buying and keeping it for 5 years, the likelihood is you are going to get some other equity out of that. You're going to be able to take that equity when you sell. So it is an investment, even though it met your needs during that time period.
Yeah, and like you said, we've gone up how much in the past 5 years?
55, 56%, 55% on average.
I mean, that is absolutely amazing. All right,
Yeah.
if you'd like to continue this conversation with Mark, make sure you reach out. Your contact info?
Sure. Website, skabowskiteam.com. Phone numbers, 574-527-0660. You can always email me, mark@skabowskiteam.com.
And look for our mugs on TV. We're
got
on
it.
YouTube.
YouTube.
You've been listening to Real Estate in Real Time. Have yourself a wonderful weekend.
All right.